Hi, I'm Kerry Grinkmeyer. I'm not adverse to change, and I'm not adverse to exploring different things and having different experiences. But this experience with the stock market is kind of testing my limits. You see, I've been involved in the stock market for many years. I remember very vividly the dot-com bubble and the subprime crisis, and I understood them all as they were happening. The overexuberance of the dot-com's introduction. And we have some of that going on as a result of the coronavirus and the quarantining, and then the government throwing $9 trillion at a bunch of novice investors who got all wrapped up in SPACs and EV vehicles coming out of anywhere and everywhere, and the growth of the China stock market. And we just threw so much money at the stock market that in some regards it felt a lot like the dot-com bubble, except in the dot-com bubble, people were spending their own money. In this past, what do you want to call it? The EV bubble, the coronavirus bubble. People were spending the government's money. Be honest. $9 trillion came into the economy. To give you some representation, in 2000, our national debt was $4 trillion. It's now $30 trillion. It went up $10 trillion in the last, 3 years. So there's a lot of funny money in there that has created an explosion. Now, it could have sustained itself, or it could have made a small correction as a result of the coronavirus, which created, put a lot of people quarantined, and therefore they weren't working, so our supply chain got broken. So it would be reasonable to expect that inflation would come in. A shortage of goods and increasing demand creates inflation. And then the movement to stop inflation often is to raise interest rates to bring back the demand on products. But again, we were in ridiculous situations because our interest rates were zero. Then they leveled off at 1.5 to 1.75, and now they're up to 2.75, and they're saying they may go up to 3 or 4.75. Well, historically, the interest rates are 8%. So that should not have created a situation where we have a substantial decrease, about a 14% decrease in the S&P. The wild card is a guy by the name of Vladimir Putin. And that's what I want to talk about today, and try to help you figure out how low can this go, and what should I do? What should I do about it? And that's what I want to talk about. And I want to help you experience what I've experienced as far as the therapy, let's call it the therapy, that TradingView offers me as I look back at history and try to put some reality into this crazy stock market. But first of all, let's get the legal crap out of the way and say that I'm not your financial advisor.
Best of Us Investors presents Kerry Grinkmeyer.
Wait a second. If I'm not your financial advisor, what am I? I'm the guy who's 77 years old, spent his career in the financial planning business, built a substantial business, and then had a need to find something to do, and then actually found gratification in the fact that I could share my knowledge and my experience, and maybe bring some peace into your life as you're experiencing this stock market. I don't believe that it's the end of the world. unless, of course, Vladimir the bully pushes the red button and we get into World War III. If that's the case, it's all insignificant because we won't be here tomorrow. Okay, so let's don't get too wrapped up in that. But I do think I can help you by showing you my trading views chart that I always go back to, whether it be the S&P 500 or the triple Qs. I want to show the S&P 500 starting on my date of birth, September the 5th, 1944, and how I can put some sanity into what's going on right now. So let's go over to the computer there and take a look at this. Okay, if you've been to my channel before, you've probably seen this chart that I put together on TradingView. It's kind of a history of the stock market since the day I was born. I go back to September of 1944. And I believe the stock market is proven by this chart that it's driven by events. And all you got to do is identify the events. And I put the red events up here on the top. That makes it go up. And then I put the blue events down here on the bottom. That's made it go down. And then tried to correlate and come to some sort of understanding based on where we are right now. How low can this thing go? And let me just kind of give you an overview of this. On the top side, I'm saying that the events that have driven the stock market up include the internet or digital revolution, the e-commerce revolution, social media, mobile phone revolution, big data, which includes the start of artificial intelligence. Certainly the electric vehicle had a lot to do with the surge in the market over the last 2 or 3 years. And then I'm saying the next big event is going to be that of the Medicare revolution as a result of our learning that our healthcare system is broken, brought to our attention by the coronavirus. Then on the downside, certainly the ones that I have experienced and I have recollection of is the Dotcom Bubble, the Subprime Crisis. The Dotcom Bubble was all about over exuberance over this new digital revolution, and anything that had the name Dotcom Bubble, .com behind it was going to go up in an enormous price. And then the 2008 was the subprime crisis. That was truly created by our banks and their nasty and greedy lending situation. So they brought that upon us. And now we're in this situation of 2022, which we're having a reaction from a couple of things, inflation and interest rates going up, and then the Russian-Ukraine situation. And I really believe this is all as a result of the coronavirus and our government's reaction to the coronavirus, which created an unparalleled free money atmosphere. If you look at this blue line, you see the growth of our national debt. In 45, it was 251 billion, and then it got up over, in 75, 30 years later, it got over 500 billion. And then as you get to 2000, it's gotten up to 4 trillion. And this was a reaction to the government no longer having to balance its books because we came off of the gold standard. There was no control factor. It was just basically you can print as much money as you feel you need at this time. And you can see as we started printing money, the amount of liquidity, the amount of money that was in the system had a direct effect on the rallying of the stock market and the financing of these revolutions. It took money to create the digital revolution and the e-commerce and such. So you can't say it wasn't justified because it created the world that we're living in right now. So, but the question is, okay, how low can this go? So I go back and I look at the dot-com bubble, and it took from, it looks like roughly November March of 2000 to March of 2003, so almost 3 years it took for us to hit a bottom, and that was about 48%. And then when we come to the subprime crisis, if we put a date on that of roughly November of 07, and then we go to May of 09, that was a 44%, 44.5% drop. So my mind says it's potentially possible that there could be a 40 to 44% drop in the stock market over that period of time. So what I did was then go and say, okay, if the high was up here of May of 22, then we could come, if we're going to come down 44%, the S&P 500 could drop from 4,770 down to, what would that be? Where's our dot here? 2,700. So it could drop 2,000 points to equal that 44% drop. Now, do I believe that is going to happen? I don't know, because there's a wild factor here. If you had told me a month ago that there was a potential drop in the stock market of 44% because of high inflation and interest rates, I'd say you're crazy. That isn't going to happen because the inflation is transitory. It was created by a shutdown of anything and everything. And so, the one that I was very involved in, we were building houses. The cost of lumber went up, 200%. And we're still dealing with that. And we're dealing with the cost of oil. But that's evolved. That's as a part of the Russian-Ukraine situation. And interest rates, well, interest rates were ridiculously low. I mean, at one point they were zero. And I always like to tell people in I guess it was 67, 68, I paid 14.5% interest for a mortgage. So they're ridiculously low. Historically, they're somewhere around 8%. So I guess if you would have said to me, how low can this go without the war and nonsense going, I would have said maybe 20%. So that would have put us about right about here, and it would have been the S&P would be down to would go to about 38.20. But when you put the Ukraine-Russia situation in there, and now that they bombed just very close to Poland, you don't know where Vladimir is going to stop, if he's going to stop. I grew up, as I said, in the 60s, and we had a lot of bullies. I went to a high school in Champaign, Illinois, and it was a melting pot. The whole city came together, and we had bullies who just would test you as far as you could. I was one of those dumb kids that would stand up to them and say, "Hey, if you want to skip the line, if you want to take something I got, you got to come through me." Well, a bully isn't accustomed to that. He's accustomed to saying, "You got something I want, I'm taking it." And that's what Vladimir is basically doing. And Vladimir, it's spelled with a V. Until somebody says no, he's going to keep taking. So I don't know how far this can go down. The other side of it is, I did a video just last week. The other side of it is I could die tomorrow, along with you. If we get into a nuclear war and the missiles start flying, we could all die tomorrow. And I was talking to 3 guys today, and my issue is we have a real disease that is running rampant, and it's called greed. And if I want something, I take it. And I won't go in, and I'm not going to get political, but Russia isn't the first person who has done this. And we, and when I say we, I mean you and I are the only people who can stop this. We have to pick our leaders and let them know what we expect and what we will and we will not tolerate. The Russians are being lied to, but at the same time, I'm quite sure we're being lied to. There's just too many greedy people out there. So how low can this go? All I can say is I'm willing to bear it. Now I'm in a unique situation that I don't need this money. I can get by without it. It hurts. Yeah, it hurts substantially being down $250,000, $300,000 from where I was. But I keep coming back and saying this is going to happen. The healthcare revolution is going to happen. We've learned a phenomenal lesson about supply chain. We've learned a phenomenal lesson about the global economy. I remember in 2000, we were celebrating the global economy. Well, look what the global economy has done. It has made us dependent that we get 4% of our oil from Russia right now, even though they're bombing the crap out of Ukraine. We don't have the balls to say, no, we won't take it. Send your ship back. We're not taking it. I don't care what we said last week. We don't want it. And until we get the balls to do that, and until we get the balls to say to Vladimir, we got aircraft carriers sitting out there waiting. They're waiting for your next move, and we're ready to go. So you tell us, Vladimir, which direction are we going? When that happens, we got more aircraft carriers than anybody in the world. When that happens, when the bully knows we're ready to punch you in the nose, we're ready to put you to the ground, and we dare you to take the next step. When that happens, this will stop. But until it does, yeah, it could go down. We could match the 40% drop and bring the S&P down to somewhere around 2,800. That's where I think. Now, I want to then preface that and talk a little bit more about what should you do. Is this the time to bail? Let's talk about that. Okay. The other thing I've done on a regular basis is share a chart of my big six. Actually, there's 7 in my 6. Facebook, Microsoft, Amazon, Google, NVIDIA, Apple. And the 7th one is Tesla. I probably won't be owning any Tesla anytime in the near future, although I must admit at one point it was the largest holding that I had. But because I don't want exposure to China and because I don't believe that automobile companies have any means of making a profit in the long term, I don't own Tesla. But I do want to share with you that some of these companies, as you see in the chart, are below my target price. In particular, Facebook, Microsoft, and Apple. And Google's getting very close. The one I really want to buy is Amazon. I did a video yesterday explaining why I think Amazon is a model for how companies should be run and really how our world should be run. We have to get rid of the bullies, and the bullies don't always come from the obvious places. We've had a few in my lifetime that reside here in the United States with me, and I'm not going to get into the political. Nita says I should not talk political, so I won't. But I wanted to show you that chart, and there's some good buys here. There's some fear, and the real fear is what will happen relative to Russia and Ukraine and where he'll go after that. But the end result of all this is very, very positive. And that is to say, we have less, I like the phrase, we have less technology and innovation in our society today than we ever will in the future. It is coming so fast artificial intelligence and genome sequencing and genome editing and alternative energy and just a revolution in the way everything works. I mean, we talk about, Jim Cramer today said, well, of course we should be buying oil. Okay, Jim, on the short term, yeah, if Vladimir keeps playing, yeah, we should be buying oil. But if Vladimir shuts down, Jim, that oil's coming down fast, okay? And if, in fact, Tesla and Elon Musk and the automakers get what they want by 2030, that oil's coming down fast. So be careful about what you buy and understand what you buy and why you own it. But getting back to, we are in the best position that the world has ever been in if we can get rid of these bullies. We have a disease that is rampant throughout the world, and it's called greed. And the attitude is coming back of, if you have something I want and I'm bigger than you, I'm going to take it. We have to stop that. And that has to stop with you and me. We have to let our politicians know that you play that game, you're out. And if you play that game, and this is something I think that needs to be considered. If I want my neighbor's home and I just go and take it, I'll go to jail. I'll go to jail. We've had some people who have decided they wanted Vietnam and they wanted Iran. Those people should be in jail. Because if they don't go to jail, if they're allowed to go to Texas to paint, then anybody and everybody will say, well, if you can go rape a country and go to Texas to paint and live off a government pension and have Secret Service for the rest of your life, maybe I'll do that. Maybe I'll do that. That sounds like a good route. No. If he were sitting in prison right now, or worse, if there had been a Nuremberg after Vietnam and after Iraq, this would not be happening today. No, it would not. Bad behavior would be punished, and it would not happen again. But until we don't punish bad behavior, it'll continue. If you don't take the bully down, he'll keep bullying. He'll even come into your high school with weapons. You've got to take him down. But we don't have a society right now that subscribes to that. Okay, this is Kerry Grinkmeyer. I think this will all be something we will look at in the rearview mirror and say, boy, I'm glad we got through that fiasco. If you think like I do, or if you want to be a part of the tribe that I participate in, come to Best of Us Investors, and subscribe to Trading Views and build yourself a psychiatrist that is based on history that gets you through these hard times. Okay? I'm glad to be with you again. We'll get through this. Trust me. Been here before. We'll get through this. Talk to you again tomorrow.